Yeah, man, hey, hi, I am Michael from Jamaica, and in my head, I have the stock recommendations for your financial independence. In today's video, we introduce TELADOC Health to you. TELADOC Health is the world leader in the field of telemedicine, and although the share seems to be quite highly valued, we see a potential 10-bagger in this company. You see, in this video, we want to clarify why TELADOC is such a potent company, which we believe has the same development potential as Amazon as of January 2012. Finally, as always, we look at the chart for technically reasonable entry possibilities. Hey, if this topic interests you, then stay tuned. After the risk disclaimer, we continue. So you see, TELADOC Health was founded in Dallas, USA in 2002 and has a market cap of $25.99 billion. The company has been listed on the New York Stock Exchange since 2015, and you can see the trading symbol right above me. So, what does TELADOC Health do? TELADOC says the following. TELADOC Health delivers, enables, and empowers virtual care services that span every stage in a person's health journey, from wellness and prevention to acute care to complex healthcare needs. We use proprietary health signals and personalized interactions to drive better health outcomes across the full continuum of care. That doesn't sound bad, but can TELADOC really do it justice? It is a fact, that TELADOC has the resources to provide patients with the necessary medical care for practically all disease patterns, from clinical routine, emergency and intensive care to chronic diseases. The company's doctors can use the video calls to investigate symptoms, prescribe medical tests and medication, and make referrals to specialists or to emergency rooms. Sufficient for this is a registration through the health insurance. But this virtual doctor's visit also makes sense for patients who pay their bills themselves, as the costs are lower than for a personal visit to the doctor's office. This telemedical service connects doctors and patients quickly, effectively, and cost efficiently. So, what is the situation for TELADOC today? Well, the company has grown steadily even before the corona pandemic, but COVID-19 has provided an additional growth sprout. The subscriber base has grown by 60.8% compared to last year, and the total number of virtual visits by subscribers increased by 92%, and the customer retention rate is over 90%. This impressive growth will weaken somewhat in the post-corona period. The company will return to normal healthy growth. What will remain is the fact that COVID-19 has established TELADOC as the address for contactless medical consultation, a brand advantage that cannot be valued highly enough. So, why does an investment make sense? Well, even if the growth rates of 2020 will not continue, the arguments for a long-term investment in TELADOC shares have not only been confirmed, but have also become stronger. Long before the corona pandemic brought terms like social distancing and the new normality to our vocabulary, TELADOC triggered an evolutionary rethink in the health sector. Telemedical consulting can be described as a quantum leap in the interaction between doctor and patient, especially in the younger generation. And this rethinking will quickly gain a foothold and become part of everyday life, man. You see, a survey conducted by McKinsey in 2020 confirms that 74% of patients are satisfied with telemedicine after they have tried it. As long waiting times are very unpopular with GPs, but not unusual, it's very likely that TELADOC can and will capture market shares of primary care practices and emergency facilities. Through targeted acquisitions of competitors, the company has been able to continuously improve both qualitatively and quantitatively. This spectacular merger with Live and Go Health in 2020, formerly the biggest adversary of TELADOC, makes the company practically unrivaled in the market. Live and Go is a specialist for diabetes patients. Its digital networked medical devices ideally complement the TELADOC range. The considerable development potential of this merger is just beginning. The takeover of the company in touch in 2020 also fits perfectly with the corporate structure of TELADOC. Telemedicine is not only cost-effective for patients, but also for employers and health insurance companies, a fact that will ensure that this type of medical treatment will not only be maintained, but will continue to grow rapidly. TELADOC has so far been mainly active in the US market, but it is making intensive efforts to expand. This is underlined by the recently concluded partnership with Telefónica, a Spanish telecommunication company with a good market presence in Europe and Latin America. With revenue of only 11% outside of USA, TELADOC still has plenty of room for growth in the global market. Also interesting is the possibility to create an own insurance product. TELADOC could establish itself as a provider of primary care. The company could become the first point of contact within the medical chain, and this worldwide. So, where are the risks? Well, despite all the justified euphoria about the seemingly unlimited growth opportunities, we should not forget that TELADOC is not yet profitable. Growth costs money. We can see this in the profit margins of minus 16.24% and a return on equity of minus 9.82%, and also the debt of $482 million US compared to the cash of $510 million US is anything but reassuring. But to resolve the dilemma of a lack of cash, the company issued an $850 million convertible bond in May. So, due to the corona pandemic, 2020 was a particularly successful year for TELADOC, which is already mentioned, cannot continue in the same vein. And despite the growth in 2021, this will lead to negative comparisons with the quarterly balance sheet of 2020. This could possibly cause investors to stay away from TELADOC shares next year. So, in a nutshell, TELADOC Health's long-term development potential is considerable. However, anyone with a short-term investment horizon should keep their hands off this share at the moment. In 2021, the price of this share will probably come down a little before it starts to rise again with new momentum. So, with all that said, let us now look at the weekly chart. The current chart situation can only be described as unfortunate. Although we have an intact upward trend, but which appears rather tired after two unsuccessful attempts to create a new high, the market tends to move sideways. At closing prices above $209, the situation brightens up noticeably, but the upward trend only continues at prices above $253. A support is offered at 182, 168.50 and 148.50. The two highs could be interpreted as a double stop, which would be a reversal formation. The chart could also be interpreted as a shoulder head, shoulder formation, which also would be a reversal formation with a downside potential of up to 148, as I already mentioned, a somewhat unfortunate chart situation. All in all, you see, I would wait with an investment until the situation is clarified, and due to the high single investment for a put contract, we have not recommended a cash secured put option this time. So much for TELADOC. Have fun and good luck with your investment. Listen, man, if this video has brought you any intellectual added value, please leave a comment. We are also happy to answer any criticisms or suggestions. Subscribe to our channel and benefit from our knowledge and experience on the way to your financial independence. Oh, and one more thing, happy holidays!